Lots of questions this morning for you about what is happening. And so let's just start with what do you know and what are you investigating?
Andrew, as you can imagine, and your viewers know that I can't speak about any possible investigations, but let's step back and say what's happening here. And it's really as old as finance and as antiquity. When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside, these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then when markets turned on them, it appears that a lot of customers lost money. And that's where our mission is about those customers.
Well, let's talk about that, Gary, because critics would say, look, you have been talking about the need for regulating and yet have not. There's been lots of focus. We had you on last time when you went after Kim Kardashian. But on a relative basis, going after Kim Kardashian compared to what is now a massive undoing of FTX isn't enough. What do you say about that?
Look, I think that investors need better protection in this space. But I would say this is a field that's significantly non-compliant, but it's got regulation, and those regulations are often very clear. And we have multiple paths. And one path is working with those crypto exchanges, crypto lending platforms, and to get them properly registered. And why that matters is that's so the public's protected. But we have another path, which is enforcement. We've brought, between my predecessor and the teams now at the SEC, at least 100 actions in this case. And we've been very clear in these various enforcement actions. And we had a big win even this week on a crypto token called Library, where a court clearly said, you've been on fair notice. And yes, this is a securities under the securities law.
But Gary, in fairness, there are millions, if not billions of dollars that are going to get tied up that potentially will get lost in this situation by investors, not just retail investors, but pensions that have given money to venture capitalists that have invested in these things. Shouldn't this be more regulated?
Yes, Andrew, and the laws are clear. And look, the runway is running out. I mean,
Hold up. Which laws are clear? Where's the regulation that Gary Gensler is talking about? We've been here for the longest time, and all I can see is the Howey test, which doesn't properly describe the kind of securities and non-securities that we have today. Or am I wrong? Gensler, guys, is just confused as to what to say after the current FTX saga. He's been warned to set proper regulations since the start of the SEC versus Ripple case, but he never did. Look at what has happened this year alone. And if we don't have clear guidelines by the end of the year, the crypto market is going to crash. Now, I've said this time and time again. Gary Gensler needs to understand what cryptos are and go for the right companies. I mean, FTX was sitting right under his nose, and Gensler didn't even double check the network. What did he go for? Ripple, the most straight crypto company in the game. But before we get deeper into what's going on, let's roll that intro. As always, welcome to Moneyside, your favorite crypto channel. If you're new here, hit that subscribe button and turn on notifications. That way you get updates when we drop new videos. And don't forget to smash that like button. And remember, you can leave a comment or a question in the section below. What I keep asking myself is, what does Gary Gensler mean when he says that crypto is a filed that's non-compliant? almost all crypto companies strive to ensure that their company is by the book. The only problem is that they don't actually know the rules that they're supposed to be following. And when the shit hits the fan, Gensler now takes to the media to convince the public that he's actually doing his job, which I'm sorry to say he is not. At this point, I really don't think the SEC should be in charge of the crypto network at all. They're just making up the rules as they go along, and that is quite dangerous for the entire crypto network. What's more, the worst just happened. Binance has decided that they will not take FTX.com. Yep, you heard that right. And that means that the red we've all just witnessed is only the beginning. Apparently, FTX has an $8 billion hole in its books. That means that they owe $8 billion more than they have in the bank, and that is disastrous. If your crypto doesn't have a strong backing behind it, it will crash. Now, okay, I think that's enough gloom and doom for today. On the bright side, Ripple is set to bring real estate transactions on the XRP ledger, which could potentially change how we transact in real estate. In other news, Congressman Tom Emmer tweeted, "Interesting that Gary Gensler runs to the media while reports to my office allege that he was helping SBF and FTX work on legal loopholes to obtain a regulatory monopoly. We're looking into this." The walls are closing in on Gary Gensler, and it's time that he tells the truth. Guys, we need to be ready for the next bullish trend that is about to happen. So, which crypto do you think is going to survive the storm? Leave a comment in the section below. My obvious choice is XRP.
You mentioned the sort of the mass of digital assets that are out there as well. I had an interesting conversation with Gavin Wood of Parity very recently, and he said he doesn't expect a lot of these cryptocurrencies to survive, and effectively in the world of whatever becomes Web3, that people aren't going to want to trade in and out of loads of coins to kind of use services as well. What's your view?
I would echo that. This is a number of years ago during the ICO boom, and I think in some ways the ICO boom wasn't particularly great for crypto, but some good things probably came of that, just like what's going on with stable coins. I said somewhat controversially around that period that I thought 99% of crypto, at the time there were 2,000, not 19,000, and I said that I thought 99% of them would probably go to zero, and that didn't make me a lot of friends in the crypto world. Since then I've been very wrong, I guess, because now there's 19,000, so we've moved the other direction. I would agree with Gavin. It's not clear to me whether there's a place for all of these, but I also think as you go from first generation technologies to second generation, you get more specific use cases for specific types of solutions. And look, I think we even have seen with what's going on in the NFT market, the gas fees associated with NFTs are in some cases astronomical. And are the underlying layer one technologies able to support NFTs in the kind of first generation? And I think we're finding probably not. And we need to find better technologies that can support NFTs, because I don't think NFTs are going away by any stretch.
As always, do your own research and always trade safely, guys. Please keep in mind we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can always let us know what you think in the comment section below, and let's have a conversation. Thank you so very much for watching. Don't forget to like this video, and please click on that subscribe button below and turn on notifications so you get informed whenever we post our amazing content. We'll look forward to seeing you on the next Money Side.